What's going on, everybody? So I want to take a look at a stock potentially that could be setting up for a fantastic swing trade into 2022. Now, this video is going to go over some technical analysis, not so much from a lot of the videos that I do from like a day trading perspective, but I'm going to take a look at the bigger time frame here on the daily and the weekly time frame, and we're going to kind of look out and map out some levels where potentially we can get into a trade that's going to offer a good risk to reward ratio here. So the stock that we're going to be taking a look at is going to be FUBO, Fubo TV. This stock has been absolutely hammered and hasn't really done too much of anything for a while here. Pretty much, the last half of 2021. We know that coming off of 2020, this stock did phenomenal things all the way up to a high price of, if we kind of scroll back here and just look at the weekly chart for a second, we put in those highs of $62.29. Now, by no means am I saying that we're going to come all the way back to $62 in the near time future. There's a lot of levels of resistance that we still need to get over. Some of these bigger macros, these pinpoint levels that we need to get over is around the $22 mark. I think between $22 is going to have initial room to run to around 30. And then I think that next level, which we got rejected at 2 times in 2021, is going to be that $35 level. You can see here, just from the weekly time point, we kind of came up tagged it 1 week here, 2 weeks here. So realistically, in 2021, we tried to accomplish taking out that supply at around $35 and was rejected. So in the future, if we are able to get over $35 on Fubo, that's where potentially we can start to see a bigger run up into 43. And then any close over 43 can start to retest those highs of $62. And that can really start to bring in a lot of momentum behind the stock. But as we're looking at the weekly time frame here, we are at the bottom of the channel. Lows, recent lows, $14.80. So technically, if I do go back to the daily chart here and I kind of zoom this in a little bit, going back to these previous $14 lows, I'm going to show everyone here how we can set up an easy swing trade with low risk with the maximum amount of reward on this trade. So if we just go back here and we go back and we look at this date here of 5/12, we put in this long bottoming candle here, $14.80. And you can see here, as of recent late in December, we kind of came down, touched this $15 area 1, 2, 3, 4 times. So what I'm going to be looking at here is if we can pick up some shares or even some leap contracts, some options, anywhere in this $15, $16 range can potentially give you a fantastic risk to reward, just due to the fact that we are going to lose or use $14.80, $14.50 as our absolute stop. With that being said, we know that we can get into this trade now, potentially risk $1, $2 on this overall trade. Tell ourselves, if we lose this $14.50 range, then we know that this is going to come down all the way down here on this daily chart and test, or potentially could test, this bottom channel at around $11. But just due to the fact that small cap stocks have been so heavily shorted and so heavily under a lot of selling pressure, just due to the fact that a lot of institutions, a lot of these big time funds and Wall Street traders have just parked easy short money into these plays, just due to the fact that anything fishy or anything a little wacky happens in the market, these potentially are going to be your safest bets to the downside. And a lot of, these institutions who have shorted these stocks have made tremendous amounts of money, just coming back to recent price points here in around November, where we were up around this $35 level. And then we could see right after earnings here on the 8th of November, we had this gap down. And then it's pretty much for 2 months here just been drifting every single day. We have had a few pops, so yes, there has been a little bit of pockets to be able to make some money to the long side. But typically, anytime you're in a downtrend, and when I'm talking a downtrend, I'm talking about trading underneath supply. So for me, that big macro level of supply is going to be the 50-day moving average. Typically, if a stock is trading below the 50-day moving average, I'm more confident to short the rips and buy the dips. So with that being said, is any sort of green pop that you have below the 50-day moving average generally tends to get faded in the days coming after, or in the weeks coming after. But since we're starting a new trading year, since there's been a lot of tax loss harvesting, a lot of people selling out of these positions on these small cap stocks, typically what you generally see in the first quarter of any new year is money flow start to come back in. Now, with these old previous runners, like stocks like Fubo, stocks like DraftKings, like SoFi, PLTR, any one of these stocks that had big, massive run-ups, you know that the interest is there. However, it really needs 10-15% days for that interest and momentum to start sparking back. As of right now, a lot of people are not wanting, and when I'm talking about people, I mean the average retail investor is currently either A, holding these positions in down a significant amount enough. So what they're doing is just holding for better days. And the problem with that is when you hold for better days, you don't really get that new money flow coming into these positions. So it's easy to fade any one of these green days or green weeks even. But with that being said, the way that these stocks start to build the momentum again is having those 10% green days, a 15% green day. That really starts to spark a lot of interest from the average day trader, the retail day trader. A lot of people, in the retail space start to really pile in as the stock goes higher. So typically as stocks are running up, it creates a lot of FOMO, a lot of retail investors start piling in, and then you get that rug pull normally when you're underneath supply. Versus the smarter way to take the approach is to buy the dip. So if you're currently holding a position in Fubo right now, I would seriously consider averaging down into that position into the $15 and $16 area and just using that $14 area as an absolute stop. Tell yourself, if we lose this $14 area, I'm going to get out of the trade, reassess, do we come down here into this $11 target zone, $12 target zone? Then I'll think about reinvesting and adding into a position there. But if we can hold this previous low and also this a lot of sideways consolidation here, because you can see we're really not making any new lower lows. We're kind of putting in a low, then we're bouncing up, then we're putting in another low that's a little bit higher, and we're kind of just chopping around. Realistically, going back about 2 to 3 weeks, it looks like we could be basing out here on Fubo, meaning that yes, we're going to experience a little bit of chop, but I think that as soon as we can start closing over the 10-day moving average, get back above the 20-day moving average, and an initial price, if we just take a look at this technical analysis here, if we get over this purple line, which is a 20-day moving average, and that price is going to correlate with around the $17, $18 area. As soon as Fubo TV can start closing over $17, $18 area, that's where we're going to have a little bit more room to run with an initial price target, I would say within the next 30 to 45 days of around $20 to $22. If we can get over that 20-day moving average, I would be confident to hold this potential swing into that $20 to $22 range. As long as we are staying over this $14.80 area, then from a longer term perspective, let's go 6 to 12 months out, I would be more than happy to hold a position here as long as we're holding over $14. If we're holding over $14, and let's say it takes 6 months, but in 6 months we go from $15, $16, $17 price point up to $26, $30, you're going to initially be doubling your investment. So, from a risk to reward standpoint, you're risking 1 to 2 points for a potential 10, 15, 20 point move in the next 6 to 12 months. Guys, I hope this helps you out. I hope it gives you a little bit of clearer context on the bigger picture here. From a day trading standpoint, I really wouldn't mess around with it until we close over the 20-day moving average. Let's give it a price of $18. If we want to start short-term swing trading this, where we're going to play weekly option contracts, or we're going to look to trade this on a day-to-day basis, let's let this close over $18. Let's let it back
to your Wi-Fi network. You can find setup instructions in the help section of your Alexa app.
Let's let it back test $18. And then as soon as we get that second bounce off of $18, let's look for a price target of $20 to $22. Now, from a swing trade look and point of view of things, as long as we are staying above $14.50, let's continue to hold Fubo and let's get an initial price target of $18 and then from $18 into that $20 to $22 range. And if we can continue to build over this range, I would get extremely more confident in this trade and more bullish as we start to approach the 50-day moving average at around $22.60. As soon as we can close over the 50-day moving average and successfully backtest and hold that, your entry down here between $15 and $17 is going to look very, very A+. I hope that helps, guys. Join my Discord. That link is down in the description box below. Also, visit my website, evolutiontraders.com. Give me a thumbs up, subscribe to my channel, and I will see you guys all in the Discord on Monday.